Okay, it's a Monday morning, the 12th of August. Welcome to the session for tonight. Welcome to who do we have tonight? Let me just check who's online. Can we do this? Okay, all right, okay. Unfortunately, welcome, Prudence. You are welcome, Prudence. We're just gonna, I don't think, okay, we don't have to wait for more people to join in. What we're gonna do is we're gonna go straight to this, actually recorded. So if it's recorded, we don't actually need to just, wait for people to join in. We can just go through the session and we can catch up on it we can catch up on it via YouTube. Okay, yeah, okay. Just want to confirm if you can see the screen with my on it with the document on it, because that is where we can start it. How to trade forex, because that's the document we're gonna get started with. Okay, perfect. Thank you very much for confirming. I'm happy about that. All right. Okay, so this is a document we want to go through. Okay, so how to trade forex like a banker. Okay, so remember everything we are talking about tonight. By the way, my name is President Wonga. We have Prudence in the house. We're still waiting for more guys, more traders to join in, more leaders to join in, more portfolio managers to join in. All right. So when you say how to trade forex like a bank traders, we are talking about number one, having an attitude that when you are trading, you are trading in the market that is going nowhere. Okay, so you're not gonna rush into taking trades. You're not gonna rush into taking any trades. Okay. Number two, we're gonna approach the market like we are professional traders. Okay, so we need to approach it as professionals because this is a professional business and it does pay. Okay, so I know a lot of traders they come to the market obviously because it pays a lot of money. You've got a potential of making a lot of money, which is good. Okay, but also don't forget that in when you make if any business you can make a lot of money in that business. Remember, a lot of people will be attracted to it, which means even the bankers will invest a lot of money to making sure they are also making profits. Okay, so meaning, firstly, focus on your education, focus on your skill set, and then money will follow afterwards. Okay, so how to trade forex like a bank trader. So what we're gonna do, we're gonna go through the slides, and then what we do, obviously, we go through some charts analysis. If you've got any pair that you want us to check it out tonight, make sure you also share, on the chat box. So please check this pair out. I've been watching it. Obviously, this week we've mentioned on the group that it's a big week for USD. If you go through, I think if you go through what I've shared yesterday, which was a Sunday, I was just sharing some of the upcoming, fundamentals. Obviously, on today, there was nothing much, in terms of the news, except people were over the weekend. They were talking about the rallies that were held by, Mrs. Harris, also the one that were held by Trump. Okay, those were the talks of the weekend. Obviously, we had a lot of people talking about Olympics. Yeah. And then obviously tomorrow we're gonna have UK jobs and we're gonna have USD PPI, which is your inflation numbers, your producer price index tomorrow on Tuesday. And remember, talks in terms of there's a potential that we might experience some cuts in terms of the rates and in the month of September. But obviously, everything is according to the numbers. Is data driven? Okay. And then on Wednesday, we're gonna have the Reserve Bank of New Zealand. It's gonna have an interest rate decision, and we're gonna have UK CPI, USD CPI on Wednesday, and GDP the second quarter for Euro. And then on Thursday, we're gonna have Q2 GDP for Japan for the yen, and AU jobs on Thursday, and China's retail sales and GDP on Q2 for UK, and USA retail sales Yeah, all those numbers are coming through this week. Okay. But obviously, the main focus is mainly on USD PPI, the inflation numbers, and UK jobs tomorrow. Okay. So, and obviously CPI, a lot of traders are looking to that, and GDP numbers. Okay. So, but with all of this, it's important that we should not. Okay, we will check out what else? All the gold and the Bitcoin. Okay, perfect. Okay. So how to trade forex like a bank trader? Remember, if you're a trader, these are the three decisions as a trader that you must make. Okay, when to place a trade. Okay, when you say when, obviously we're talking about the time. Number two, we are talking about the session. Okay, we are also talking about the condition in terms of the graph, the charts, the candlestick. We're talking about all those things. And secondly, we are talking about the condition in terms of the fundamentals. Okay, where are orders that are out there. Obviously, if you are a retail traders, you can't see the number of orders that are being placed. But if you are bank traders, you can see. But how you can see as a retail trader is by looking at the way the chart is behaving, what type of a candlestick is being formed at that particular time. Then that is how you can decide, okay, fine, now it's time for me to take it. Now, during the opening of the week, a lot of traders were trapped in the wrong direction. Opening of a session, the market maker, they want to trap traders in the wrong direction. Closing of the week, they want to trap traders in the wrong direction. Okay, so which means opening of a session, those are the time when the bank traders or the market makers are trapping traders in the wrong direction. Opening of a session, opening of the week. Okay, avoid placing trade along those session times. Okay, so and then opening of the week. Okay, you don't want to be just the week is just open and you just want to go all in. And then sometimes you want to avoid opening trades very news release. Just suddenly you are going all in. Okay. So that is one thing. So these are the decision you must make. Okay. Secondly, when to close a trade. You must know when to close a trade. Obviously, if you're retail traders, you will look, avoid if you've got a small account, avoid, or holding trades in terms of swing trading over the weekend, especially if you have not been trailing your stop. Okay. And obviously average. So that is very important to note. Okay. And then when to take profit decision, a trader you must make. Okay. And then the trading method the bank used isn't based on technical analysis or chart patterns. It's based on how retail traders think and make decisions. Okay. So now you must think about this because remember, the bank traders are focusing on orders that are there for buying and how many orders are there for selling. Okay. If there are more people selling than they are buying, obviously the market is going to drop. There's going to be a huge lot of supply, so the market is going to drop. Okay, and obviously let's just take a look at the way retail traders make decisions. Remember, retail traders place their trade upon seeing some sort of criteria filled based upon technical analysis. It could be a moving average. Remember, if you are trading a BTMM, obviously you're looking at the 5 and the 30 and the 50 and the 200, 800, you're looking at those moving average. And you're looking at the candlestick patterns. Oh, maybe the market is at support level or it's at a resistance level. So these are some of the technical, analysis a lot of retail traders we are using basically. Okay, retail traders, they close their trades when the market hit their stop loss, which means that the reason all the hits or they close their trade minus it. Okay, you do not close it based on the movement. You close it because it hit your stop loss, or you just close it just because you know what I'm saying. You know what? I've been holding for this trade for 3 hours. I've been holding this trade for the analysis. They just close their trade. And you should, especially if you've got a strategy. Okay. Most retail traders take money. Okay. Sometimes take profit orders will be placed by a trader agent. Obviously, they define a point and trade will automatically close once it reaches a certain amount of profit. This is where if you are a retail trader, you put your TP, and the market hit your SL, that's how you close the trade, or you close it manually. Okay, or maybe it goes your trade. Okay, that's how you close your trade. Okay. All right. If you talk about institution, we are talking about banks, we're talking about hedge funds, we are talking about market makers. Okay, if you talk about market makers, the only way these trades, the only way they can close their trades or open their trade if there is enough opening orders, opposing orders that are available. Okay. For example, if a bank traders wanted to buy 100,000 euros, he needs other traders, us, to be selling same amount of 100,000 euros at the same time. Otherwise, they cannot buy the full amount. Okay. So what does this mean? This means if a bank trader they want to buy 100,000 euros. And when they go to the market and they see that no one is actually selling 100,000 euros, what they will do, the market makers, is definitely because the market makers will want traders to commit into selling. So they will show you that the market is going to drop. They'll show you some technical indicator, some technical candle, some technical confirmation, or a stop hand in the opposite direction for retail traders to sell. And when they sell, that means they have enough orders for them to start buying their 100,000 euros. So if they want to buy, they cannot just buy anyhow, because the market makers the market is liquid for us. Whenever you want to buy, as retail traders, if you feel like buying this, you can buy. If you feel like selling, you can sell. But if you're a bank trader, if you're a market maker, if you are trading for institution, you cannot just buy. You need to have opposite orders to the bank has a large open sell position. The owner of other traders come into the market and place sell trades. If not enough people are selling, it won't bank to take the amount of profit he wants to take off. Okay. I hope that makes sense, guys. If you've got any question, please don't hesitate to ask on the chat box. Okay. So, for example, if a bank traders they want to sell, the ones who open a large sell position, or they want to take some profits, or they want to play some trades. The only way they can do that if there is enough orders going opposite direction. Okay. So talking about placing trades, closing trades, taking profits is not something the bank can do whenever they want. They must be right amount of buy or sell orders in the market. If there are not enough orders, the banks cannot do any of these things. They cannot place trades. They cannot close trades. They cannot take profits. That is why they have to give you a spike. The spike is going to make you aggressively place those trades. The spike is going to drive your emotions to take a trade. That is why they have to do a stop hand. The stop hand is for you to go opposite to the direction that they want to take. That is why they are trapping people in the wrong direction, because that is how they can open their trades. That is how they can close their trades. That is how they can take their profits. If there are not amount of people that are selling or buying, they can't. They need people, they need traders to be going opposite to the direction that they wanna take. Okay. So when the banks want to place trades, one of the main things they look at is if a large number of retail traders are currently long or short. So they will go to some people call it, the orders that are out there. Check how many people are long, how many people are short. Remember, most of some of what you call the brokers, they've got a platform where they can see how many people are long, how many people are short, because the only way they can make money is if other traders lose money. It's a zero-sum game. If not many people have trades open, the banks won't have much money by causing a reversal. So they always check how many people are placing their trades. So understand this. When will the banks place their trades? They need a lot of traders in open trades whom they know will lose money if they enter their own trades and cause a reversal. Okay, they need enough orders in to actually get whatever trade they want placed. If they want to place a buy, they need to see a lot of selling, a lot of people selling. If they want to place a sell, they need a lot of people buying because they need to sell to the buyers. If they want to buy, they need to buy to the sellers. So whatever you see that is triggering people to sell big time, chances are the bank traders, they see a lot of people entering their sell, they know it's the right time to buy. That is why, people say, when there is blood on the street, when people are fearful, you should be greedy. I'm not saying be greedy, I'm just saying what people say. Yeah, what is being said out there. Okay. That is why, so be fearful when people are greedy and be greedy when people are fearful. Because at those times when a lot of people are selling, that is where you see a lot of bank traders coming in. So, firstly, we need to figure out when the large number of retail traders have entered a trade. It's only by understanding this we'll be able to determine when the banks are likely to enter trades because the primary condition, if you can figure out, if you go to the charts and you can see where a lot of retail traders have entered their trades, whether it's selling, whether it's buying, that is where you will get to understand, now that is where you get to understand, okay, this is one where a lot of traders would definitely, lose money if the market was to reverse. Okay. So now, okay, you need to be able to locate where banks have placed their trades. The banks can only enter when enough orders are available. The orders they need must be the opposite to the trades they want to place. E.g., they need sell orders to place buy trades. Okay. So for us to find the exact point where the banks place their buy trades, all we need to do is find where a lot of traders would have been entering sell trades. Simple, right? But it's not that simple, but it's a simple equation. You need to just find where a lot of people were selling. That is where you figure out, okay, now, as a banks, will you have used those orders? Remember, it's all about orders. It's also about buying, selling. You've got pending orders. You've got, obviously those pending orders where if the market break this level, I'm selling. If the market reach this level, obviously some people say I'm buying. You know, that's basically it. Banks will place their trades. All we need to do, well, our trader would have been answering the sell trades as the banks would have used to get those trade placed. Okay, the banks will can only place trade but the price is moved in the opposite direction they want to move. Okay, so what we need to do, let me just not finish this. We on number 8. Okay, on the slides. Okay, what I want to do now, I want us to go over the charts. Just want us to go over the charts. So what I'm gonna do, just gonna go over, because I know a lot of traders don't like reading, don't like going over studying material. They want to see the charts. Please, if you can see my charts, I think I had G. If you can see it, please confirm on the chart box because we're gonna analyze. We're gonna analyze. All right, we're gonna analyze. I think we've got Puran saying we should analyze Bitcoin and gold. Okay, that's fine. If you've got any requests, please write on the chat box. Write on the chat box. Write on the chat box. Oh, we've got Prince. Welcome, Prince. We've got who else we had? I think we had Lucky earlier. And yeah, okay, perfect. Okay, perfect. All right. If you've got any pair that you want us to go through, please make sure you do ask. We could, we can request, okay? All right. So we're saying, what are we doing? We are looking at the place where a lot of retail traders will have been placing their trades, okay? First of all, this is gold, okay? I always like looking at the bigger time frame. Why bigger time frame? Because you get a bigger picture of what this pair has been doing. Okay, just make this like that bigger. Okay. So if you go to this, you can see, 2022 October, you can see along those times, there was a huge drop, 16 level in terms of the gold. And since then, gold has been on the uptrend. It has been bullish, and it came back this level again. So we are looking at the long-term trend, okay? And if you're looking at gold right now, you can see it's forming some sort of a compression. And this was already on on the highest high, basically. Gold is roundabout at the highest high, and it's supposed to break that level, okay? But obviously, remember, any pair, at any point of time, you must understand that obviously this week, chances are it's gonna break this high, but it won't just break a high. It needs to obviously break retest. Okay, let's just go through gold. Okay, let me just do period separator. Period separator. Okay, today has been simple bullish. Okay, you can see gold has been really bullish today. It's been moving today. Basically, what gold is doing is testing their previous high. This high was reached on this day. So this is a high we are talking about in case somebody's asking themselves, what are you talking about? Do this. All right. Yeah. Okay. This high. Okay. So the market is resisting that high. Okay. So let's look at the sometimes I like, if we take the high candle, okay, and then we take this candle. Remember, this was before the market make a drop. So before a drop, what did it do? It created this candle. Okay, this candle in the middle. So what happens at this level? Let me just show you. See this candle. Okay. See this candle. Okay, let me just show. See this last one, this white candle here. That white candle, that white candle is a candle that made a lot of traders to enter buy trades. A lot of traders saw this candle, this bullish candle, and started entering a lot of buy trades. Straight after that, this candle was formed. People thought this was a bullish, candle, but actually it was significant. But it came back to this zone. People entering more buy at this level. So a lot of traders entered a lot of buy at this level. Okay, entered a lot of buy at this level. Okay, after this candle, it's closed up there. A lot of traders were like, you know what? It's about time we buy gold big time. Let's buy gold big time. What happened after they bought gold? This candle happened. The next candle, the black candle that is going down happened, right? It happened. That candle happened. There was this candle. Remember? A lot of people entered their buy on this candle. And then the market dropped heavy. You understand? The market made a pullback again, and another drop again, second drop to this level, and then another drop once again. Can you see that? First drop, but before this huge drop, you can see this candle was huge, huge drop. And this huge drop means a lot of traders, they've got their buy, and the market makers, the bank traders, started selling at the highest high. And the market is coming back to the same level once again, retesting the same level. You can see first drop because the drop went up until to this level. Just remove this. Drop up until that level. That is where the candle closed. If you check a Fibonacci, you'll see that is almost what 50%. Okay, when I say 50%, I'm talking about this level here, where the price came back, and then what happened? What happened? Another level of drop. Okay, this is not another level of drop. This is a drop, and then dropping below it, came back to the 50%. So what happens if you are selling something and then you increase your price when your market say retrace back to 50% level, it means the price was dropping, then the price increased by almost 50%. Then again, you sold it again, sold it again. And then after dropping below this level, and then you've got another drop, okay? And it dropped to the level of 26, 2664. All right. Okay, can you see that? Okay, I hope I'm making sense. I hope I'm making sense. All right. So after, remember we said bank traders more likely to place their orders where a lot of traders are actually buying. Okay. And you can see here, this was a huge candle. This was a huge drop. And this was a huge momentum of drop. And this here is simple a market that is taking profit from this shop and comes back to the same level. Remember, bank traders or market makers, they want to place trade almost in the same level. If they want to place a bar, they always want to place the bar almost in a similar level as before. Okay. So right now you can see gold is at the level where the bank traders entered a lot of selling. Okay. They've got entered a lot of sell, a lot of short position in that level. And that is significant because now if you go in to the smaller time frame, so much aggressive, there's a bit of a slowdown. If you go to the right, here, this level, this was a huge selling, all right? Selling point. When the market comes back to the level, if you understand a bearish engulfing, this is more like a bearish engulfing candle, right? It's coming back to the same level. Chances are there's a high probability that this will hold. But if it does not hold, what you will need to see is the market breaking above this level. Which level am I talking about? I'm talking about the level of, just delete this thing. I'm talking about this level of 2-6, this level here. If it's gonna break above, what you want to see is a market going above it and then closing above and then going further up. Okay, that's probability number one. I'm looking at the slowing down of the momentum of this. The slowing down of the momentum of this. Okay, if it's not, because the slowing down of momentum has give me a probability that this before it goes further up. Because if you've been buying an instrument, for you to make more money, that instrument needs to drop. So my conclusion on this is that you'll see gold pulling back, okay, at this level. So my expectations are on gold, it will pull back to that level. So yeah, so my expectation on gold. But before it pulls back, it might give a spike, for people to say it's going up, and then after the spike can drop. Okay. So, and if you look back, this was another previous very important level. This level here. This level was very important. I like changing, I like switching from the normal charts to the line charts. Okay, so this level here. Okay, I hope it makes sense. Okay. So that is my expectation on gold. Okay. So the price might give us a spike to the upside and then drop. Because for bank traders who have to buy an instrument, it needs to drop before they can buy it further. Otherwise, it can just break to the upside and then, yeah, okay. Let's see if we can find time to do a Bitcoin. Yeah, okay. Where is Bitcoin? All right. Where is Bitcoin? There you are. Okay, to do a Bitcoin. Okay, we got a minute. So guys, what I will do is I'll just share the analysis on the Telegram channel. Okay. As you can see, this level here, this level is our middle level. When the market has been dropping, it gets to this level. that is where it will do a pullback. Okay, and then this is where you want to buy because it's cheaper. You understand? So these are level where you want to buy any instrument after it has been, because there was this huge drop, right? And then a pullback towards a 61 level and a 50 level. So the market more likely to